Hello everybody, Chris Krashisnik here, eXp Realty, owner of the Krashisnik Group. I am a licensed realtor in Maryland, West Virginia, Virginia and DC, and I love to help people buy and sell homes, okay? The second part of our buyer series is your budget, okay? This is kind of a personal issue with a lot of people, and there's never a one size fits all, which is the case with many things in our industry and in our business. But I'll try to get through all of it really quickly. Budget has two parts to it: the cost of acquisition and the regular recurring costs, okay? We can call that your closing costs and down payment for your cost of acquisition, which is how much I'm going to come out of pocket to get the home. And then the other one is how much is it going to cost me every month, okay? To talk about your cost of acquisition, there's different types of financing. You're going to figure that out with your lender, but a lot of the financing involves a down payment of some type. FHA is kind of the cheapest down payment with 3.5%. There are some conventional programs that have 3%, 5%, 10%, and 20% or more. You can put down however much you want or you can afford on a home, okay? But a lender is going to look at that as the less you put down, the more of a risk it's going to be, and the higher your interest rate is going to be to borrow that money. And the more money you're borrowing, so that's going to raise your monthly payment, okay? Like I said, FHA, conventional, the types of financing, FHA, conventional, VA, USDA, there's all kinds of them, okay? USDA is 100% down, sort of, and I don't want to get into that. The only truly 100% down financing is VA financing, and the great thing about VA financing is it doesn't even have mortgage insurance, okay? Mortgage insurance is something the buyer is charged by the lender when they don't have 20% equity in the home, because that's considered a higher risk loan. So the bank has to buy mortgage insurance in order to insure their investment against the property in the event that the buyer would default, okay? And the reason the VA does not have mortgage insurance is because the most stable and least defaulted financing on the market is VA, okay? So I'm digressing, I'm getting a little bit down a wormhole, but your down payment is one part of what your cost of acquisition or closing costs are. The other one is what your closing costs, the loan fees, the transfer taxes, the title insurance, the settlement fees, the prorations. I don't want to get too far into the weeds on that, but it costs money for the lender to do their work, for the title company to do their work. Some things the seller may have paid for that, that they've paid up to a certain amount of time, and then you have to reimburse them for. You might have to set up your HOA fees if you're in an HOA, et cetera, et cetera. And that is called closing costs. Now your closing costs can be you can negotiate a seller credit to have the seller give you a credit in the amount of those closing costs. But what the seller cannot do is they can't give you a credit towards your down payment. So your closing costs can only be as much as your seller credit can only be as much as what your closing costs are, okay? I think that kind of explains it in a nutshell, okay, as far as your cost of acquisition or what your closing costs are. The other thing is the monthly payment, okay? And we really want to kind of talk about this a little bit because this is one of the more important things. This is what you're going to pay over the life of the loan every single month. It's what your affordability is, okay? Now, I want to first say that there's a difference between what the lender is going to tell you you can borrow and what you should be comfortable in borrowing. Back in the day, and I say that like I'm an old guy, but whatever. Back in the day, a lender told you could borrow $500,000, so you went looking for $500,000 homes, and that's within my budget, and I'll make everything work around my budget. I'm not seeing buyers do that as much anymore, which is actually, I don't want to say comforting, but it's a consolation, or it's a good thing to see that buyers are informed about their personal budgets and what they're comfortable in buying and what they expect their obligations to be in the future, and they're making better choices as consumers. So that's always refreshing to see. And I would highly recommend that any buyer go into this with your eyes completely open. What if you're a buyer who doesn't have their eyes completely open? You don't have an intimate knowledge of your budget. You don't have any, you're not as sure about what you're going to do. We should probably sit down and have a talk about that. But if you don't want to have a talk about that, then I would highly encourage Personal Finance by Dave Ramsey. Dave Ramsey is a very well-known name in the personal finance circles, and I think he's got his, you can take your issue with anybody, but if you stick to your guns on him and you stick to his principles, he's not going to steer you wrong. It may be a little bit too conservative as far as not a lot of risk, but he's giving financial advice for people who are middle-class Americans and not the higher income earners. And when we say high income earners, we mean people who make close to $100,000 a year. He's kind of teaching and educating people who make 50 to 75 or 25,000 a year. And once you get into the higher income brackets, you're going to have more disposable income, and you're going to have more things that you can do with that. So, but Dave Ramsey is a great resource. I would highly recommend looking into Dave Ramsey if you need help on budgeting and personal finance. So you're going to talk with a lender to discuss what type of financing you qualify for and what your monthly payment's going to be. Okay, let me see. I think that's about it. Oh, couple other items I wanted to touch on. A lender's going to tell you what you're able to borrow and what your monthly payment would be based upon your income, your debts, and your liquid assets. Okay, so number one, income. And the thing to talk about that is, are you self-employed or are you a W-2 employee? Are you a wage earner? Okay, if you're self-employed, you are probably filing your taxes, and the income that you take home, the commissions or the income that you make, is going to be, you're going to have deductions involved with that. So let's say you make $100,000 in commissions, but you write off your vehicle expenses, advertising, and other stuff like that. Your income is actually, on the loan application, is not going to be $100,000. It's going to be $100,000 minus all the deductions you take. Okay, and that's not very well understood in our industry. If you're a W-2 employee and you are not making any deductions on your taxes from that income, you can pretty much count the whole income. But we do get into some dicey scenarios where people say, like, I make $150,000. Well, yeah, but you write off $70,000, so really you only make $80,000, and they don't understand why they don't get approved for more mortgage, for a bigger loan amount. Okay, the next part is debts. Okay, what are your debts? That includes any recurring debt, student loans, medical bills, credit cards, store cards, car payments, and I think even if you have a cell phone financed, that might count towards, in some scenarios, towards what your monthly recurring payments are. So you have to pay attention to that. You may make $200,000, but if you have 2 car payments, another mortgage, and $250,000 of student debt, you don't have much room in your income for a lender to say, I feel comfortable lending you this money. Okay, and then your liquid assets. What liquid assets are basically, what do you have in savings? Now, there are some scenarios where buyers can borrow against their 401k or maybe a retirement account or something, and with the intention of paying it back. And that's a very dicey situation. That's a video for another day, and I don't want to get into that, but that is always, that's oftentimes an option that you could explore, but I would caution you highly against that, and we should be very conservative if we intend to do something like that. I think that's all I got. I hope you enjoyed the video. Please comment below, like, share, all of that good stuff. and I would be happy to interact with you or answer any specific questions that you may have. I would like to hear back from everybody. What is it that you as the consumer are looking to hear? What would you like to be educated on? What questions do you have? And I'll mention them in future videos, and I'd be happy to interact with you. As it is, you all have a great week. The weather is supposed to be a little bit milder, so that's always good. And talk to you later. Bye.